Welcome to ATILC webinar. This is one of the first series of our podcast that we'll be doing now going forward. And today we are looking at withholding tax regulations in Nigeria. And I have a special guest with me today. His name is Mr. Philip. I would have to read his profile for you guys because he's one of those regulators as well. So Mr. Philip is an achievement-driven accountant, auditor, taxation specialist, and also a finance professional with over 25 years of solution-driven experience in these areas. His skills are basically on cloud computing, financial reporting, information system auditing, risk management, corporate strategy, finance, and managerial finance and taxation. He has a lot. He's an ASACA member, that is, he has a CISA certification. He's also a CIT, he has a CITN certification, Chartered Institute of Taxation of Nigeria, and that's why he's here as an expert. He's also an ICANN member, an FCA for that matter. So welcome to our podcast today, and his name is Mr. Philip Beida. Okay, thank you, Mr. Philip.
Thank you very much for having me.
And again, as your host, my name is Jimoh Abdulkabir. I'm also one of the facilitators and trainers in ATILC, and we will be giving you guys, things that really matters and things that are important in the profession of finance. Is it okay? So yes, watch out for these discussions. Stay tuned, and I believe you will be enjoying the conversation. Okay, Mr. Philip, let's talk about an overview of withholding tax in Nigeria. We know that a lot of companies today, one of the things they penalize them for is withholding tax.
True.
And a lot of people don't understand why they need to pay withholding tax and
True.
what withholding tax is all about. So can you guide us a little bit, an overview of what we'll be discussing today?
Okay, so in Palace, they will say withholding tax is an advance payment of tax, but it's not really that simple, okay? It's better to understand the basis. Why should I advance pay my tax? Okay, so withholding tax is a scheme. It's not a separate tax.
Okay.
Yes, it's a scheme to facilitate the collection of income tax. Just like you have PE. PE is a scheme to facilitate the collection of personal income tax.
Yeah.
Withholding tax is a scheme to facilitate the collection of company income taxes and the rest of it. So how is it an advance payment of tax? It is a situation where the law permits the tax authority to direct that any payment you are about to make, either now or in the future, you withhold a certain portion of that payment and remit to the relevant tax authority. And that amount withheld will not be used by that taxpayer who the amount was withheld from to pay his tax obligation when it's time for him to file his accounts. Now, why withholding tax? Because why would the government wants to do that? There are two basic reasons why government all over the world use the scheme withholding tax. The first is because it would facilitate a regular flow of income to the government. Yes, because if every time I make a payment, I'm forced to withhold a certain amount and pay the government on your behalf, it means that government will always have money. That's the truth.
Okay.
Yes. Now, the second good reason is because by instructing us to withhold tax, whoever I am paying, I'm collecting vital information from the person. So, for instance, I'm supposed to pay you a certain amount of money. The government says I should withhold that tax, right? You are not in the tax net. The moment I withhold that tax from you, automatically the tax authority knows that you exist. So those are the two major reasons why we have withholding tax.
Okay, that's a great one, because just like you have said, I think the whole idea makes sense now. Yes. Because if we are waiting to the end of the year, or waiting for just like the law have said, pay tax on preceding year basis, it means the tax of this year, it is only until next year government will start getting inflows.
Exactly.
And they want to start seeing the money from now.
True.
So that is the reason why the withholding tax scheme has come to play. Okay, yes. I think now we are understanding the whole idea behind withholding tax. Now, but we know that there are challenges that we face when it comes to this withholding tax.
True.
What are the possible challenges that both as the as the government and as individuals face when this withholding tax issues comes up?
Okay. Now, the major challenge before now was ambiguity. Now, the law is clear, truly, as to when you should tax withholding tax. If you go to section 78 to 81 of CISA, for instance, the law on dividends, rent, and royalty, the law is clear and says that every time such kind of transactions are paid, withholding tax should be deducted. Now, section 81 of CISA is what makes the problem complicated. It says that any time the service opines, or anytime it is in the opinion of the service to direct you to withhold. So it is in the direction that complications came. When should we direct? To whom should we direct? Where should we direct? At what time should payment be made? So between the time that the scheme was promulgated up to the latest, we've had at least 5 different regulations around withholding tax.
Interesting. Some people are not aware of this.
Yes.
Now we are aware.
Some of them conflicting each other. Some of them conflicting on each other. Okay. Issues like what is in the ordinary course of business, what is deduction at source, what is over-the-counter transactions. These kind of things created ambiguity to implementing the regulations. Okay?
My lawyers' friends will say they will call it lacunas.
Lacunas, yes. Exactly. However, what has happened recently is that the minister exercising his powers to create regulation, section 81, subsection 9, has come to clarify a lot of these lacunas. And that's why when we are going to go through the regulation, you're going to see that the regulation specifically says that this regulation supersedes every other regulation that's ever been issued with respect to withholding tax.
Okay, so now we understand the challenges that has come as a result of withholding tax, which is basically, I think, is something that every law needs an improvement.
True.
And you have just told us that these were the challenges over time, and it has been, seeing sort of improvement as time goes on.
Yes.
And that is the reason why we have the new regulation today.
True.
So what are the major changes in respect to the new regulations that we have?
Okay, thank you very much. So the major changes that have come as a result of the regulation is, first of all, the clarification of what over-the-counter means.
Okay.
Another clarification has come to what ordinary course of business means. Okay. Then another clarification that has come is with respect to who should actually deduct. Okay. So let's take it one after the other. Okay. First of all, the regulation has come to clarify that an over-the-counter transaction is one in which the buyer approaches the seller and payment is made on the spot. So every time payment is made on the spot, it is regarded as an over-the-counter transaction. Now, but when you begin to create some form of contractual relationship, for instance, I buy from you today, Jimoh. Tomorrow I buy from you. Next tomorrow I buy from you. And in these 3 times I did not pay you. Now, when you ask me for your money and I say, please wait till the end of the month, I have created the contractual agreement. So in that instance, it is no longer over-the-counter. It means that when I am to pay you, I am to deduct withholding tax. But don't forget, the regulation came to clarify a lot of things. And that thing that the regulation came to clarify is who should deduct.
Okay.
Very, very interesting. We should know now that the regulation is very, very clear. Individuals cannot deduct withholding tax anymore.
Oh.
Yes.
Okay.
So you need to be a body corporate or incorporate. That means maybe an NGO, a trustee, and everything. You need to be a ministry, department, or an agency. Okay. You need to be a partner or in partnership or any association that has a legal form, apart from an individual. And more interestingly, small companies cannot also deduct withholding tax.
Oh,
yes.
So can we recognize ourselves as small companies?
Well, it depends. What is your turnover?
So what is the definition of a small company?
Okay. Section 105 of CISA defined a small company as a company whose gross turnover in any relevant tier of assessment is 25 million and below.
Okay.
Yes.
We have not gotten to 25
So
million,
we should.
but we are hoping to get more than that.
Yeah.
Yes.
But you see, there's a provisor which we need to know. When that small company wants to make such payments, it has to carry out 2 tests.
Okay.
The first test is, let's say we an ATILC, for instance, we're a small company, but want to pay Jimoh. Okay, we have to carry out 2 tests. The first test is to ask Jimoh, do you have a TIN?
Okay.
If you don't have a TIN means tax identification number. Okay. If you don't have a TIN, then we have an obligation to withhold, even though we're a small company.
Okay.
Yes. And why? Is to encourage
you to be in the tax
our
net.
Transactional people to be in the tax net. The second test is this. If money want to pay you is above 2 million. Okay. Now, if it is below 2 million and you don't have a TIN, we still don't have an obligation to withhold. But if it is above 2 million and you don't have a TIN, then we must withhold. But if it is above 2 million and you have a TIN, we don't have an obligation to withhold. So these 2 categories of people we need to know are exempted from withholding tax. That's the single individual and the small company, subject to these requirements. Yes. Apart from that, as the regulation says, it's as though apart from these 2 categories of people, every other category of taxpayers must withhold tax.
Okay,
yes.
I think that is actually a bit, how will I put it? It's a bit clear, but at the same time, I think it's a factor of continuous usage. Let me put it that way, and then people get more aware about it, because and that's why we're having this conversation now, so that people can now understand that okay, you can actually not deduct any withholding, but there is a reason for you to deduct even if you're a small company. And that's to encourage people to fall into that tax bracket that they are looking at. Okay, I think it's becoming much more clearer. Now we've talked about the over-the-counter transactions. We've talked about the what are the ordinary costs of business transactions.
Fantastic.
And then the third one you mentioned was the 3 major highlights. Yes, you said over the counter,
ordinary cost
of business,
and whom should,
which is the third one that we are discussing now. I think it's very clear now. The new regulation is kind of making sense now, and I believe business owners will be watching this, or accountants who provide these services, even students that are taking professional courses might find this as part of a question in an exam where they will ask who is actually responsible for taking it. Okay, now we've talked about that. What are the possible exempted transactions from withholding tax?
Yes, that is very interesting, because it was in the provision of the exemptions that we now understand what ordinary or course of business truly means. Okay. So a major change in the regulation is the complete exemption of manufacturers from deducting withholding tax. So any sale that a manufacturer does, he doesn't have any obligation. The person paying have no obligation to deduct withholding tax from that payment. And that is to encourage manufacturers, and everything. Then another clear exemption that's exciting is payment of insurance premiums. So withholding tax is not deductible on payment of insurance companies. Okay. Now it's important for you to know that also all petroleum products, all kind of, is it AGO, is it KP, all those things, Jet A, CNG and everything, they also enjoy that exemption. So what it means is that if you have an obligation to pay any of these suppliers, you should not deduct withholding tax. Now it's important for me to clarify that when it came to defining manufacturers, they said even providers of power. So what it means is that electricity, gas, anything that has to do with electricity are exempt from withholding.
So are you saying for someone, just a quick one,
yes, sir,
for someone who is into the CNG business, because the government just started encouraging CNG,
that's
and
true.
a lot of people have started going into the CNG business. Are you saying they are also, all their transactions is exempted from withholding tax as well?
Yes, sir. That is what the regulation has said.
Saying now.
Yes.
So in as much you're in that business,
yes, if you have any obligation to pay anybody in that business, you don't have to pay withholding tax. Yes.
Wow. So my clients will be happy to hear this.
Another interesting thing that the regulation has brought is what they call winnings, gamings. Okay. So withholding tax is now applicable on gamings, winnings. To put it in our local parlance, if you are doing Niger bets, if you are doing there are many names. Who wants to be a millionaire? Big Brother Nigeria, and all those. There'll be deduction of withholding tax. But the exciting thing about it is that if these activities, these entertainment activities that has to do with gambling, is in the promotion of education, science, entrepreneurship, then withholding tax is exempted.
Do you know that I used to have one client back in the days that used to have a sort of lottery kind of arrangement where it was related to school. As a matter of fact, the stuff was called School Me. But I think they didn't go on with the project because, you know, it's not like the Bet Nigeria type.
Yeah.
You know, the Bet Nigeria will make more money than the one that has to do with school.
True.
So it wasn't probably giving them the required, or they were unable to do the advert or marketing that they needed to do, and they didn't get that, you know, that kind of traction. But probably if they knew that these things are exempted from withholding, they might consider, you know, coming back to it, because since they are getting some form of exemptions, you know.
I agree.
Now let's talk about, we've been talking about the deduction of the tax, we've talked about the challenges, we've talked about the major highlights of the new change in respect to the regulation. We've also talked about the exempted transaction. What are these rates, both for individuals and companies, that people will be subject to? Of course, we'll be showing these rates on the screen, but what are these rates that we should be talking about in terms
I agree
of
with you, Jimoh.
each transaction?
I agree with you, Jimoh. We should talk about it because you remember ordinary cost of business has been wiped off.
Yes.
However, the rate for withholding tax has been reduced to 2%. But yes, you know, it used to be 5%.
It used to be 5%.
Exactly. Now it's 2%. But this is what is interesting about the new regulation. In the past, the regulation only mirrored on individuals and corporate entities, right? Right now, the regulation mirrors also on even non-resident individuals and non-resident corporate entities. Yes. So, for instance, the withholding tax on ordinary supply apart from manufacturing is 2%, right? For individuals and corporate entities that are resident. For non-resident, it is 5%.
Wow. Yes. So now we are no more talking about 10% and 5%.
That's not how it works anymore.
Wow.
We have up to 6 withholding tax rates.
Wow.
Yes, 6 withholding. It can be more, and I'll tell you the circumstances where it can be more than that. But currently speaking, from 0 to 20% we have those kind of rates. However, let us understand certain things, like director's fees. Okay, the withholding tax on a director fee on a non-resident individual or corporation is as high as 20% now. Wow. However, that is the final tax because he's a non-resident. If he's a resident, it is 15%. And you know what final tax means is that you don't have to make any returns. That's what final tax means. But where it is not a final tax, you still have to approach the relevant tax authority and say, look, this is my tax liability, but I have this credit. So what it has done for most withholding tax, for most that impacts on most non-residents, it is usually the final tax for them. Don't forget, the non-residents usually don't entirely have an obligation to pay tax in Nigeria unless they have what they call a permanent establishment. But so that is why it has been simplified for them. However, for Nigerians, most of the rates remain. But if you're in the telecom business too, rates have been dropped down to 2% too, because of the profit margin in that business. Also, if you are in the manufacturing of certain items, bridges, roads, bridges, and dams, okay, your rates have been brought down from 5% that it used to be to it's presently 2%.
Wow.
Before now, it was to be 2.5%.
So now, people like Julius Berger will not be having
tax refunds.
Yes, because their percentage has now dropped.
Exactly.
Because they have huge tax receivables in their books.
I agree.
Huge ones.
And so those were what the regulation has come to target. If you ask me, generally speaking, I think that the new regulation has come to favor more of the tax payers. But I need to say this here, and my listeners, we need to learn this. Where a taxpayer does not have a TIN or does not provide his TIN to the person obliged to deduct withholding tax, the rate doubles.
Okay.
Yes, it's very important. So if ATILC, I have an obligation to pay you, right? And I say, Jimoh, bring your TIN now. Okay, I'm supposed to deduct 5%, Abi. Jimoh, bring your TIN. You refuse to, and I had to remit that. I will remit you 10%. Yes.
So that means I must enforce you to bring your TIN.
You see, so it favors everybody, but it has come to simplify the regulation regime, and everybody is happier for it. That is the beautiful thing about this regulation. So another thing I think we should discuss before we forget is the effective date of the regulation, don't you think?
Yes. We need to mention that. Yes, so, but before we even talk about the effective date, I think we have different transactions. We have interest and dividend, and we know that the rates are 10%.
Yes.
Has that changed now?
Oh no.
Or it has remained the same?
No. So what the regulation did was that there are certain rates that are guided by law. So if you see dividend rates and interest, they are in section 78 to 80 of CISA, 71 to 73 of PITA. I cannot remember of heart the one it is in PPT. When you go to those sections, they are stated clearly in the law. So regulations cannot amend those ones. For those rates to change, the National Assembly would have to meet.
Okay. So the one that, of course, has to do with supply of goods and manufacturing, those have changed. Collocations, telecommunication, those have actually changed. Commissioning consultancy remains 5%.
It remains 5%.
5% for individual, 10% for companies.
That's true.
Okay.
For resident and non-resident also.
Okay. Then compensations for loss of employment.
Okay, that is an interesting one too. Now, that compensation for loss of employment speaks to stamp capital gains. Now, normally, when you lose your employment and your employer pays you off, there should be certain taxes on that payment, right?
Yes.
Now, what the Capital Gains Act, Section 36, I believe, says is that anything above 10 million should be subject to capital gains tax. Okay. So what the regulation has come to do is to streamline that, and peg it at 10%, anything above 10 million.
Okay, so that means if it's less than 10 million, you are exempted.
You're exempted. You get all your money.
Okay, that's good. So entertainment and sportsmanship.
Yes. Okay.
What is there any charge of that?
Yes. Or it's interesting. Now, if you are an entertainer or you are a sportsman and you are a resident, meaning that you are a Nigerian, there's no withholding tax.
So it means someone like Whiskey can go and sing all this music and no tax.
Yes. No, there's tax. It's just that it will not be deducted as well. But if, for instance, we invite Michael Jackson to Nigeria, there will be customary withholding tax. Any foreign entertainer that comes and the Nigerian company or a Nigerian establishment needs to pay him, withholding tax is deducted. And for him, that income earned in Nigeria, that withholding tax is the final tax. So why residents, which is Nigerians, for the purpose of clarity, are exempted from suffering withholding tax and such. Non-residents don't enjoy that privilege.
Okay, I think that's a lot we've learned today. We've also talked about winnings already, and we have said for some special type of transactions, like all the ones that relate to education. There is no withholding on them.
There's no withholding. Scientific, technological, there's no withholding.
But once it relates to normal gambling,
yes, Bet
Nigeria and the rest, then there is withholding. Okay, so let's talk about the effective dates now of these transactions that we have identified, this regulation. So what are the effective dates?
So the effective date for all that transactions, the regulation proper is 1st of July 2024. However, for gaming, which is something being introduced very newly, the effective date will be 1st of October 2024.
Okay, it's just a couple of months.
Just a couple of months.
So, but the as of 1st of what they call it, July, all of these other laws have already taken place effectively. So now, what dates of the board are we supposed to be paying this withholding, or we will just be paying it as it comes?
So, if the remittance is to go to FIRS, the Federal Inland Revenue Service, you must make sure that remittance gets to them on or before the 21st of the next month. Okay. But if the remittance is supposed to go to the State Board of Internal Revenue, you must make sure that it gets to the State Board on or before the 30th of the next month. Okay. Payee still remains the same, on or before the 10th of the next month, and capital gains remains the same on or before the 10th of the next month, where those withholding taxes are.
So withholding and VAT are actually sharing the same date.
Yes, if the transaction is going to FIRS, exactly. Yes. And yes, I agree with you. VAT only goes to FIRS anyways.
Yes. Okay, I think that's interesting. Now our viewers and listeners now know that these are the dates, so they don't have to miss the dates for filing their withholding tax. Now let's talk about some of the offenses and penalties that comes when you don't actually file your withholding tax. Because that's another issue.
So let me start with what we have already discussed. Where you do not provide a TIN to the person that has the obligation to withhold, you pay twice the rate. Okay, so that is clear.
That's one.
Now, where you deduct and refuse to remit, Section 40 of the Establishment Act, would be applied to you. And what does Section 40 says? It says, if you deduct and you refuse to remit, the amount so deducted would be collected. 10% of that amount will be charged as penalty. Then another interest at the minimum rediscount rate plus 5 will be charged as interest for holding government money for that period. So
basically discouraging you, go and pay.
If you collect, go and pay. However, if you did not collect, fail to collect at all, you would suffer an administrative penalty only of that 10% and the interest. The amount you did not collect at all will not be part of your offense.
Okay, so that means for someone who did not withhold, is only subject to that 10%.
Yes, that 10% and interest.
Okay, but for someone that withheld and refused to remit, he has 10%. He has
interest at the minimum discount rate plus 5. So if the minimum discount rate is 27%, that's plus 5, making 32%.
Wow, that's a lot. And of course, one of our great, authors and scientists have said that the hardest thing to understand is the word is what? Your income tax. Which is actually true, because you can see he has given us a whole lot of information today, and some have been ringing through my head and seeing how I would actually go back to educate my clients on these issues, because they need to understand it, and that's what we encourage them to do, what they need to do, the right thing they need to do, right? And it is now in us to make sure we educate them more, and also share these videos to our colleagues, friends who are professional colleagues in this field, and now know what to do in respect to withholding tax. So before we get towards the end of these things, What are the takeaways and the implications in respect to withholding tax?
Okay, so there are a lot of them, truly, but let's just take one or two, okay, for the purpose of time. The first implication is that systems have been configured to mirror the old rates. Such systems would now have to be reconfigured. Before, we used to have only two clear rates, 5 and 10%.
5 and 10, yes.
Now we have 0 rates, we have 2, we have 2.5,
like
we have 5, we have 10, we have 15, we have 20.
20,
yes. And in a case where you did not provide your tin, those rates can double. So we can have at least 12 rates with 2 scenarios. So you can imagine MDAs will have to change their system, gift mix will have to change, system, So that is one big major implication that we need to take home. Okay. The second implication, which is very clear, is that of knowledge. Okay. Now, as tax law becomes clearer, the tax code becomes wider. Okay. So, God forbid that we should know all the laws. Okay, that's Lord Dennis, right? But then but what is important is that you should know where to find the law. Because, as John said, the avoidance of tax is the only intellectual pursuit that carries any reward. Anytime you avoid, so for you to do that, so the implication is that you need to begin to learn to engage your consultants. Like Mr. Jimoh. You have to get in touch with him. He has the capacity to learn all the laws. You understand? Because they are becoming more and more. Because ignorance of the law is not, truly an excuse. Now, like I said, they are reducing the margin on some like telecom collocations, industries and everything. So the issues of tax refunds are becoming simpler. But there's another very hard implication. In the past, the tax authority was responsible for issuing you a receipt on refunds, right? Now it is the person that deducted that has the obligation to issue a receipt.
So how do
we have no idea.
How do we
yes, I know the question you are going to ask. So that creates an implication. It means tax authorities will now have to go and sit down and design a system,
a template that can work. Yes.
Thank you very much.
Because I would have said, am I having my own receipt? The next person has his own receipt.
Oh, there's actually a format. The question is not even in the issuing the receipt. Is it not to give you a receipt? The question is validating and authenticating this receipt. Tax authorities will now have to devise schemes on how to validate and authenticate this receipt.
Okay, so that leaves us with that question. We will go back again and be thinking about how this will be resolved.
True.
And we hope that it will be resolved within a short period.
It has
so that although thanks to the Tax Pro Max portal, once you are able to file, you get to see the credit.
The receipt immediately.
You get to see credit on your portal. Exactly. So, but pending till that, we would have to wait for the tax authority to give us a proper guidelines. Maybe they'll create something on the Tax Pro Max portal that can help people to generate that receipt.
Exactly.
So that we'll just input the figure and then it generates and then we'll be able to give it to the user. Or when we make payments, it gives us the ability to be able to generate the receipt and then we give the person who has suffered the withholding tax. So it's actually been a great discussion so far.
Yes, sir.
We have learned a lot, starting from the inception where we were talking about the overview till we moved down to the challenges that were faced. We then moved down to the major highlight that has changed, and then we now talked about the rates that has come up, and we then cascade down to the implications. And it's been a pleasure. We've learned a lot today. So thank you, Mr. Philip, for this wonderful sit down with us that you discussed extensively about the withholding tax regulation, the new withholding tax regulation in Nigeria. I believe our audience today would have learned a thing or two from it, and thank God they always have the ability to rewatch this program so that they know that, okay, this has been seamless, this has been simple. We are only going to bring you the best of people who come here to talk about issues that affects your practical accounting day. You understand? Anything that has to do with your accounting, your finance, your management accounting, your risks, everything will be bringing it to you. As a matter of fact, the next time we'll probably be seeing Mr. Philip. He will come and educate us more on how to, get this pioneer legislation, because it's another interesting topic that we would be talking about. I think we'll bring him again, some other time to come and discuss this issue. So stay tuned on it and, expect us to give you the best of the best. So thank you, and see you guys in another ATILC podcast series. Okay.